Now come to the next topic, analysis of financial statements. This is under part B. So first of all, we'll try to understand the financial statement. We know that the financial statement is the end product of accounting process, and this financial statement provide us the information about the profitability of the enterprise as well as the financial position of the enterprise, means health of the enterprise. So financial statement includes both statement of profit and loss and balance sheet. So when I'm talking about the financial statement, as per section 2 subsection 40 of the Companies Act 2013, financial statement, this financial statement in relation to companies include the followings. Financial statement in relation to company include the followings. So there are 5 things are included under these sections. Section 2 subsection 40, section 2 subsection 40 of Companies Act 2013. So first one is statement of profit and loss, statement of profit and loss. Second one is balance sheet of the companies. Third one is cash flow statement. Okay, third is cash flow statement. Next is your statement of change in equities. Statement of change in equities. Is it clear? Equities. Statement of change in equity. And fifth one is your explanatory notes. Notes to account. Explanatory notes. So as per section 2 subsection 40 of the Companies Act 2013, financial statement in relation to company include the 5 things. First one is statement of profit and loss. Second is balance sheet. Third one is cash flow statement. This is cash flow statement. Fourth one is a statement of change in equities. And fifth one is explanatory notes. When I'm talking about the annual report of a company, annual report of the company include all these things. In annual report of a company, statement of profit and loss, balance sheet, cash flow statement, director's report, auditor's report, business responsibility report, statement of change in equity, explanatory note, corporate governance report and social report. These are the reports apart from the statement of profit and loss, balance sheet, cash flow statement. Apart from that, these all are included in your annual report of a company. Annual report is different and financial statement includes the 5 things, but annual report, apart from the information in the statement, financial statement, other things are also included like director's report, auditor's report, business responsibility report, corporate governance report and social report. So these 5 are statement of profit and loss, balance sheet, cash flow statement, statement of change in equity and explanatory notes, means notes to account, are the part of our financial statement in relation to a company. These are the things which are included in the financial statement of a company as per section 2 subsection 40 of the Companies Act 2013. And when I'm talking about the annual report of a company, in annual report, so in annual report, in addition to that, other reports are also attached. Other reports are what? Director's report, auditor's report, business responsibility report, corporate governance report and social report. These reports are attached. These reports, director's report, auditor's report, business responsibility reports, okay, corporate governance report and social reports, these are the part of our annual report. Is it clear? Now come to the values that the company has to comply or should observe. Value that a company should observe while preparing financial statement. What are those values that the company must comply while preparing the financial statement? Number one values is shall give the true and fair view of the state of affairs. True and fair views of state of affairs of the companies. Second is shall comply accounting standards. Shall comply accounting standard notified under section 113. So while preparing the financial statement, the accounting standard must comply, which is notified under section 133. And third one is shall be financial statements shall be in the prescribed format, prescribed form given in schedule 3rd, given in schedule 3rd. So for balance sheet, part 1 of schedule 3rd, part 1 of schedule 3rd for balance sheet, part 1 of schedule 3rd, this is for balance sheet. And for statement of profit and loss, for statement of profit and loss, part 2 of schedule 3rd, part 2 of schedule 3rd for statement of profit and loss, part 2 of schedule 3rd. So these are the things that company must comply or observe while preparing the financial statement. These are the values that must comply or observed by the company while preparing the financial statement. Number one is shall give true and fair view of the state of affairs of the company, means profitability and financial positions. Second one is comply the accounting standard notified under section 133. And third one, the company must prepare the balance sheet under the prescribed form given in schedule 3rd. For balance sheet, part 1 of schedule 3rd, okay, and for statement of affairs, part 2 of schedule 3rd. Company prepare their balance sheet in vertical format, in a vertical format under part 1 schedule 3rd, part 1 schedule 3rd. So in a vertical format, company prepare the balance sheet. Heading will be balance sheet of the name of the company. We have to write the name of the company as at, if the financial year end on 31st March 2020, then we will write it over here as at 31st March 2020. So format is particular note number. This is for note number. Note number. This column is for figure as at the end of the current reporting period. Current reporting period, and figure as at the end of the previous reporting period. Previous reporting period. Suppose the current reporting period is 2020-21. So or current reporting period, suppose we are preparing the balance sheet as at 31st March 2020. So current reporting period will be 2019-20. Here we will write the figure of 2019-20 and the previous year will be 18-19 to 2018-19. So this is the figure as at the end of the current reporting period. If our current reporting period is 2019-20, then here we'll write as at 31st March 2020 and the previous reporting period will be 2018-19. This is the previous reporting period. So figure of the current reporting period and figure of the previous reporting period. Company prepared the column for the amount for two periods. One is for the figure for the current reporting period and second column is for figure for the previous reporting period, so that we can do the comparisons easily. So particular note number, here we will write the detail in note number, we will write the detail in note number. One final figure we will write it over here and detail you can see in the note number. Suppose I have written share capital note number 1, then we have to refer note number 1. The entire information you will get it about the share capital in the note number 1. So this is for note number 1. Here we will write 1, 2, 3. Suppose share capital is note number 1, reserve surplus is in note number 2, money received against share warrant note number 3, share application money pending allotment note number 4. So if you want to see the detail about these all information, you have to refer the note number, concerned note number. So detailed information will be in the note number. So particular note number, figure as at end of the current financial year and figure as at the end of the previous financial year. So this is the format in a vertical format. So start with the equity and liability. Here we will write the first equity and liability. Okay, equity and liability. In partnership firm, we have prepared the balance sheet in horizontal form. In horizontal form, left side your capital liabilities and right hand side is your assets. In partnership firm, the balance sheet is prepared in partnership form in which format we have discussed it and we have completed just now in a horizontal format. Left hand side is your liabilities and right hand side of the format is your assets, but here the company prepare the balance sheet in a vertical form. Okay, so in the vertical form, start with the equity and liability. Number 1 will be equity and liability. This is for number 1, equity and liability. So first one is your shareholders fund. Shareholders fund. Under the shareholder fund, there are 3 items, A, B and C. Under the shareholders fund 3 items: share capital, reserve and surplus, money received against share warrant. Share capital, reserve and surplus, money received against share warrants. Second one is share application money pending allotment. We'll discuss later on. Money, share application money pending allotment. Application money is received but allotment is not done. Financial year is closed, money, application money is received by the company but the allotment of share is pending and the financial year is closed. So this will be reflected over here, share application money pending allotment. Thereafter third is non-current liabilities. Non-current liabilities. Under the non-current liability, there are the 4 non-current liabilities. 4. There are 4 non-current liabilities. First one is long-term borrowings. Long-term borrowings. Deferred tax liability net. Deferred tax liability net. Other long-term liabilities. Other long-term liabilities and long-term provision. Fourth number is long-term provision. So under the non-current liabilities, there are the 4 liabilities: long-term borrowings, deferred tax liabilities, other long-term liabilities, and other long-term provision and the long-term provisions. These 4 are under the non-current liabilities. Now come to the fourth one. First one is shareholders fund, second one is share application money pending allotment, third one is non-current liabilities, fourth one is current liabilities. Under the current liability, there are the 4 current liabilities. First one is short-term borrowings. Here in the long-term liability, long-term borrowings, here in the short-term borrowings in the current liability. Thereafter trade payables, creditors and bills payable, trade payables. Thereafter other current liabilities. Thereafter short-term provision. You just see non-current liabilities, there are the 4 items: long-term borrowings, here what we have written, short-term borrowings. Deferred tax liability, okay, here we have written trade payables. Other long-term liabilities, there will write the other current liabilities. Long-term provision, short-term provisions. So under the current liability, there are the 4 current liabilities. Now you do the total of the liability side. You do the total of the liability side. So there are the 4 liabilities heading wise. Under the equity and liabilities, there are the 4: shareholders fund, number 1, number 2, share application money pending allotment, number 3, non-current liability, number 4, current liabilities. So in the shareholders fund, there are 3 items: share capital, reserve and surplus, money received against share warrants. Money received against share warrants. Under the non-current liability, there are the 4 items. Under the non-current liability, subheadings are subheading. This is the main heading. Non-current liability is the main heading. Under this heading, there the subheadings are long-term borrowings, deferred tax liability net, other long-term liabilities, and long-term provision. So we'll do the total. So shareholders fund, share application money pending allotment, current liability and non-current liability and current liability. So do the total of the liability side. This is for the current reporting period total, and this is the total of the previous reporting period. Now come to the asset side. Assets. Liability is completed. Equity and liability is completed over here. Now assets. In assets, there are the 2 types of assets. Number 1 is non-current assets and number 2 is current assets. These 2. First one is non-current assets. Second one, current assets. See this, current assets. Under the non-current assets, there are 5 assets: fixed assets, non-current investment, deferred tax assets, long-term loans and advances, and other non-current assets. So under the non-current assets, the 5 subheadings. Subheading number 1, fixed assets. Subheading number 2, non-current investment, then deferred tax assets, long-term loans and advances, and other non-current assets. Now come to the fixed assets. Under the fixed asset, there are the 4 assets. Under the fixed asset, 4 type of assets: tangible assets, intangible assets, capital work in progress not yet completed, suppose that building under construction, capital work in progress, and intangible assets under development. intangible assets under development. So under the fixed asset, there are the four type of fixed assets: tangible assets, intangible assets, capital work in progress, and intangible assets under development. Now non-current investment, after fixed assets, non-current investment, then deferred tax assets, then long-term loans and advances, then other non-current assets. So these are under the non-current assets. Now come to the current assets. Under the current asset, there are 6 items. Under the current asset, there are 6 items from A to F. First is subheading is current investment. Under the current assets, first subheading is current investment. Thereafter inventories. Thereafter trade receivable. Then cash and cash equivalent. Then short term loans and advances. And then other current assets. So under the current assets, there are 6 assets. 6 different type of current assets. First one is current investment, second inventories, trade receivable, cash and cash equivalent, short term loans and advances, and other current assets. Now we'll do the total of these here. Total, this is the total of current and non-current assets, non-current assets and current assets total. So total assets of the current reporting period and total assets of the previous reporting period. Is it clear? So company prepare the balance sheet in a vertical form. Part 1 of schedule 3rd in a prescribed format. In a prescribed format. You can't change this place. This is in a prescribed format. So you can't change that this will be at the top and this will be at the bottom. No. This will be at their own place. It's in a prescribed format. So under the shareholders fund, there are the 3 items in sequence like this, in the same sequence. Thereafter share application, money pending allotment, next item. Third item is current liabilities, non-current liabilities. Under non-current liability, the 4 item is here, and these item will be in the same sequence. We can't do the changes that this long-term provision will be here and this will be there. No, this will be in the same sequence. Current liability will be under the same sequence. These 4 items will be in the same sequence. Short-term borrowings, trade payables, other current liability, and short-term provisions. Now the total is here. You do the total of all liabilities. Here you do the total of all assets. Okay. So assets, under asset, there are the 2 assets, non-current assets and current assets. Under non-current assets, there are 5 assets: fixed assets, non-current investment, deferred tax assets, long-term loans and advances, and other non-current assets. And under the fixed asset, there are the 4 type of assets: tangible assets, intangible assets, capital work in progress, intangible assets under development. Under the current asset, there are the 6 items. Subheadings are 6 subheadings: current investment, inventories, trade receivable, cash and cash equivalent, short-term loans and advances, and other current assets. Now you do the total. Both total must be matched. So we'll discuss one by one. Start from the share capital. Okay, we'll explain from the share capital first, thereafter reserve and surplus. Now one by one we will see the share capital first. This one, share capital. Under the equity and liability, the heading is shareholders fund. Under this shareholders fund, our discussion is share capital. Okay, share capital. This one, suppose share capital information will be in note number 1. Note number 1. This is the note number 1. So if you want to see the detail, any stakeholder want to see the detail about the share capital, they have to refer the note number 1. So note number 1, you will get it like this. Note number 1 regarding the share capital. So share capital, authorized capital, number of shares you have of rupees 100 each or of rupees 10 each. So we'll write it. Suppose the number of share is 1 lakh shares, authorized capital 1 lakh shares of rupees 10 each, then we'll write 10 lakhs over here, 10 lakhs, and this will be closed. Then issued capital, after suppose that out of 1 lakh company has issued 80,000 shares of rupees 10 each, so it is 8 lakhs is the issued capital. This also be closed block. Thereafter subscribed capital. In the subscribed capital there may be the subscribed and fully paid, and there may be the subscribed but not fully paid. Subscribed and fully paid means company has called the full nominal value and shareholder has paid the full amount. Is it clear? Then it is called subscribed and fully paid. Company has called full nominal value and shareholder also pay the full nominal value. Then it comes under this. Suppose out of 80,000 shares, 70,000 shares of rupees 10 each company has subscribed and shareholder has paid the full nominal value, so it is 7 lakhs. Okay, subscribed but not fully paid. Subscribed but not fully paid. This may be the company has 10,000 shares of rupees 10 each, rupees suppose 8 called up. It means it is not fully called up. 8 called ups, then it is 80,000. So this comes under subscribed but not fully called, not fully paid. So this we will write in the outer column 7,80,000. Add forfeitures. If there is any forfeiture balance, then that forfeiture will be added. Another is company subscribed and not fully paid up means company has called but shareholders failed to pay the amount. Maybe some part is not paid by the shareholders. Maybe few shareholders has not paid the some portion of the called up amount. Suppose company has called up 8 rupees but shareholder has paid only, company has called 10 rupees and shareholder has paid only up to 8 rupees. Maybe 2 rupees is not paid by some of the shareholders. So the calls in arrear. This will be under calls in arrear. Okay, this will be under calls in arrear. So for instance over here 10,000 shares of rupees 10 each, rupees 10 called up. So company has called up how much? 1 lakh rupees is called up by the company. Okay, but 5,000 shareholders has not paid rupees 2 per shares. So calls in arrear is 10,000. So it is 90,000. So 7 lakhs plus 90, so 7,90,000 will be in outer column if there is no share forfeited. If there will be a share forfeited, then we will add the share forfeited. So the format will be in the notes to account. You see the detail: authorized capital, issued capital, subscribed capital. Under the subscribed capital may be this one subscribed and fully paid, and subscribed but not fully paid. So we have to separate these two. Subscribed and fully paid means company has called full nominal value and the shareholder has also paid the full nominal value. There is no arrear. Second is subscribed but not fully paid. Company has called but shareholder, maybe some shareholders, has not paid the full nominal value. So calls in arrear. So this will comes under the subscribed but not fully paid. And another thing also comes under subscribed but not fully paid if the company has not called the full nominal value. Suppose the face value of the share is 10 and company has only called rupees 8 per share, then this will come under the subscribed but not fully paid up. Okay, so this will, if you want to see the detail about the share capital, you have to refer note number 1, where you will see the detail about the share capital, that the authorized capital of the company is this, subscribed capital is this, issued capital is this, calls in arrear, share forfeited, everything you will get all these information in the note number 1. In the note number 1, the information regarding which is given, information regarding the share capital has given. Okay. After the share capital, next is what? Next is reserve and surplus. So under this reserve and surplus, if it is in note number 2, so you can see the detail under the reserve and surplus in the note number 2 separately. Just like a note number 1, there is a maybe note number 2. So in the reserve and surplus, these reserves comes capital reserve, capital redemption reserve, security premium reserve, debenture redemption reserve, revaluation reserve, share option outstanding account, other reserve, surplus. Surplus means balance in the statement of PL after the appropriation of dividend or bonus share or any sort of reserves. So surplus. So these are comes under the reserve and surplus. So under the reserve and surplus, capital reserve. Capital reserves may be the gain on sale of fixed assets is a capital reserve, non-recurring nature, gain on purchase of a running business, gain from reissue of forfeited share when the forfeited shares are reissued by the company, and gain on redemption of debenture. These are the gain. These capital gain will be transferred to capital reserve. Next is capital redemption reserve, security premium reserve, debenture redemption reserve, even investment fluctuation reserve, revaluation reserve, share option outstanding account when the company issue the share to their employee, at a discount. Suppose 100 rupees share is issued to their employee at a discount of rupees 30, means issued at rupees 70. So that 30 rupees will be credited over here, share option outstanding account. Next is other reserve, if any sort of other reserves are there, and surplus, that is the balance in statement of profit and loss after the appropriation of your bonus shares or dividend or whatever it may be after doing allocations. Here, if there is a debit balance in the statement of PL, debit balance, then that will also be shown under bracket, under the surplus, shown under the bracket, and will be shown over here, reserve and surplus. If the reserve and surplus have a negative figure, minus, so that will be shown as bracket, under bracket. Okay, this will be shown under bracket. Now see one question related to reserve and surplus. Okay, one question. Olympus Limited has an opening debit balance of 5 lakhs in reserve. Debit balance of 5 lakhs in reserve and surplus as balance of statement of profit and loss. 5 lakhs. Suppose it's a note number 2. Reserve and surplus note number 2. So opening balance means last year balance become the opening balance for this year. So it's a 5 lakhs negative balance. So 5 lakhs debit balance means it's a negative balance. So Olympus Limited has an opening debit balance of rupees 5 lakhs in the reserve and surplus in the statement of profit and loss. So it means it's a loss. Debit balance indicate the loss. So opening balance of the current year, it means it's a closing. Last year balance is 5 lakhs. This become the opening for the next year, this current year. If it earned a profit of rupees 8 lakhs for the year 31st March 2019. Financial year is 2019 is the financial year, closed at 31st March 2019. Means previous year is 2017-18 and this year is 18-19. Current year is your 18-19. So it earned a profit of rupees 5 lakhs. Profit earned during the period is 8 lakhs is the profit earned during a period. Last year it is 5 lakhs negative. Opening balance in the statement of profit and loss opening was 5 lakhs negative, and the profit for the period means 2018-19. The profit is 8 lakhs. So minus 5 lakhs plus 8 lakhs, it's a 3 lakhs. And this 3 lakhs we'll write over here in the current reporting period. 3 lakhs in the current reporting period. So this balance sheet is, if I am talking about the balance sheet date, so balance sheet date is 31st March 2019 and this is 31st March 2018. Previous year 18, current year 19, 31st March 2019. Okay? Is it clear? So note number 2. Is it note number 2 about the reserve and surplus? So balance in the statement of profit and loss, opening debit balance 5 lakhs minus, and surplus for the period 18 and 19 financial year is 8 lakhs. It's a profit. It has written that it earned a profit of rupees 8 lakh for the year ended 31st March 2019. So minus 5 plus 8, 3 lakhs is plus. This 3 lakhs is for the current year. Now see the another question. Glaxy Limited has the following balances on 1st April 2018. 1st April 2018 is the previous year as per this question. 1st April 2018 is the previous year. So Glaxy Limited has a following balance on 1st April 2018. General reserve 4,50,000 and statement of profit and loss 2 lakhs. Okay. So total is 6,50,000. So I am talking about here, so it is 6,50,000. General reserve is 4,50,000 and statement of profit and loss 2 lakhs. This is the balance of 1st April 2018. Means this year opening, current year's opening balance, means the previous year closing balance. During the year 31st March 2019, our financial year is 18-19, 31st March 19 and previous year is 31st March 2018. So in this date, this is the opening balance 6,50,000. This includes general reserve 4,50,000 and statement of profit and loss 2 lakhs. During the year ended 31st March 2019, it incurred a loss of rupees 3,20,000. Current year there is a loss of rupees 3,20,000. How would you show this item in the balance sheet and notes to account? So come to the notes to account first. So general reserve, the last year balance is 4,50,000. 4,50,000 is the balance of last year. I have written over here 4,50,000 general reserve. Surplus is 2 lakhs is the surplus. Last year surplus is 2 lakhs. This is the opening balance. Balance in statement of PL opening is 2 lakh. This is the balance of the last year. So this year it is the opening. Current year there is a loss of rupees, as per the information 3,20,000 is the loss. So minus. So 2 lakhs minus 3,20,000. So it is 1,20,000 negative figure. Negative. Now you deduct 4,50,000 minus this one. So it is 3,30,000 positive. 3,30,000 is now positive. So you write 3,30,000 over here. 3,30,000 over here. 3,30,000. How this 3,30,000 comes? For that you have to refer note number 2. So in note number 2, opening balance of general reserve. This is the opening balance of general reserve. And surplus opening balance is 2 lakh profit. This year loss is 3,20,000. So minus 2 lakh minus 3,20,000. 1,20,000 is the minus figure. So 4,50,000 plus and minus 1,20,000. So 3,30,000. So you write 3,30,000 over here. Note number 2. Now see the third question related to reserve and surplus. Royal Limited has the following balances on 1st April 2017. Means this is the last year balance, become the opening balance of this financial year. So Royal Limited has the following balances on 1st April 2017. So what are the balances? General reserve 2 lakhs. General reserve it is 2 lakhs balance. So current financial year is 17-18. Previous financial year is 16-17. 16-17. So this is the information about the 16 and 17. So 17 March and 1st April 2017 is the same figure. So general reserve is 2 lakhs. Security premium is 1 lakh. Security premium reserve is 1 lakh. These are the opening balance, and 7 lakhs is the opening balance of statement of PL. These are the opening balance. These three are the opening balance. So in the last, if you see the last year in 2017, so 3 lakhs minus 7 lakhs, so it's a 4 lakhs. It's a 4 lakhs minus. Is it clear? 4 lakhs minus 7 lakhs in surplus of last year balance. Last year balance is general reserve is this and security premium is this. So 2 plus 1 3 lakhs minus 7 lakhs. So 4 lakhs will be reflected in the last year balance sheet. Now see, during the year 31st March 2018, means our financial year is 17-18. During this year they suffered a loss, incurred a loss of rupees 4,50,000 is the loss. So total loss is, if you see the total loss, this loss is 11,50,000 is the total loss. I am going to write this figure in the outer column, 1 lakh and 2 lakhs. General reserve is 2, security premium reserve is 1. Now we will do the total. So it's a 11,50,000. It's a negative figure minus 3 lakh. So it is 8,50,000 minus 8,50,000 minus. So this 8,50,000 will be reflected over here in the note number 2. Reserve and surplus 8,50,000. If you want to see the detail about 8,50,000, you see in the note number 2. So in note number 2, previous balance of security premium reserve is this much in the opening. In the current year there is no security premium. Same with the general reserve, opening is this. Surplus, if you talk about the surplus, last year surplus is 7 lakhs and the current year is 4 lakh 50 minus. So it is 7 lakh minus 4 lakh 50 minus, so total is 11 lakh 50. Now you do the total, there the two figures are positive, one figure is negative. So ultimate negative is more than the positive, so it 8 lakh 50 is a debit balance. So this debit balance will be reflected over here. Okay. So general reserve 2 lakh, security premium 1 lakh, statement of profit and loss 7 lakh. These are the balance on 1st April 2017. It means previous year is 2016-17 is the previous year and current year is 2017-18 is the current year. So information about the general reserve, statement of profit and security premium, these informations are given of this date, which is the opening balance for the this financial year, current financial year. During the year ended 31st March 2018, it incurred a loss of rupees 4 lakh 50. So total loss is now 11 lakh 50. So these item will appear in the, so how these item will appear in the balance sheet and notes to account. Is it clear? This will appear in this way. So here balance sheet is 31st March 2018. Now next is in the equity and liability side, under the shareholders fund we have seen share capital, thereafter reserve and surplus. The next item is money received against share warrants. We have discussed share capital is discussed, reserve and surplus is discussed by me. Now third one is money received against share warrant. What is share warrant? Share warrant is a financial instrument issued by a public company. Okay, it is issued by a public company. Give the rights to acquire certain number of shares to the holder of the warrant at a specified date or after a specified date at a predetermined price. At a predetermined price. So what is share warrant? First one, you just understand that share warrant is a financial instrument issued by a public company which gives the right to the holder of the share warrants. What the rights thus has given? To acquire certain number of equity share, to acquire certain number of equity share at a predetermined price after a specified period. Next is they are not shown in the part of the balance sheet. They are not shown as a part of the share capital. They are not shown as a part of share capital, but to be shown as a separate line item. This is not shown as a part of share capital, but is shown as a separate line item, money received against share warrants. Is it clear? Money received against share warrant. These three things comes under the shareholders fund. Shareholders fund, share capital, reserve and surplus, money received against share warrants. So share warrant is a financial instrument issued by public company which gives the holder the right to acquire a certain number of shares at a specified date at a predetermined price. Okay, at a predetermined price. It is not the part of the share capital. It is not the part of the share capital. It is not included in the share capital, but it is shown as a separate line item. It's a separate line item. It is not part of the share capital. Is it clear? Next item is share application money and pending allotment. Share application money pending allotment. This one. Second one, share application money pending allotment. Company has received the application money from the applicant, but the allotment is not done. Okay, amount will not be refundable. This will be definitely allotted. It is not mentioned that the amount will be refundable. If it is not mentioned or specified, then this will be shown under the second heading, share application money pending allotment. So share application money pending allotment, here the company received the application money, but the allotment of the share is not done, because the allotment may be in the next financial year, and in between that the balance sheet, we have to prepare the balance sheet. So application money received, but the allotment falls in the next financial year. So this will come under here in the second heading. So two things are, we have to see that these two things, application money received not exceeding the issued capital. It never be exceeding the issued capital. It is within the issued capital or less than the issued capital. So number one is application money received should not exceeding, it is not exceeding the issued capital, and to the extent not refundable, and to the extent it is not refundable to be disclosed. Not refundable to be disclosed. It means that amount is not going to refund. Then this will be shown over here under second heading, share application money pending allotment. So application money received by the company, but allotment falls in the next financial year. Application money received, but date of allotment falls after the date of balance sheet. And second important information is what? The application money which is received it is not exceeding the issued capital, and to the extent not refundable. This is to the extent not refundable to be disclosed. Then this will be shown over here. Otherwise, if application money which is received to the extent refundable, if it is refundable, or the maximum subscription is not met, public is not applied for the maximum number of subscription which is required for allotment. If it is not met, then definitely the amount will be refunded to the applicant. Then on that case, such amount shall be shown under the separately under other current liabilities. Under the heading current liabilities, the last subheading is other current liability. Then this will not shown over here. If the application money which is received from the applicant by the company, and that application money, if it is not allotted, if the share will not be allotted, this will be refunded, amount will be refunded, then on that case that amount, that number or that amount will not be reflected over here. That will be reflected under the current liability. Fourth heading. First heading is shareholders funds, share application money pending allotment, non-current liability, and the fourth one is the current liability. Under the current liability, fourth subheading is, this will be shown in the other current liability. When it is shown in the other current liability, if the share application money to the extent refundable, if it is refundable, or the maximum subscription is not made or not received by the company from the applicant, then the application money will be refunded. In these circumstances, such amount shall be shown separately under the current liability, under the heading current liability. Under the current liability subheading number 4 is other current liability. And if it is not refundable, if it is not refundable, then this will be shown here, share application money pending allotment. So share application money pending allotment not exceeding the issued capital, number one. Number two, to the extent not refundable and it is not disclosed, then that will be shown under the second heading, share application money pending allotment. And if it is refundable, okay, if it is refundable or the maximum subscription is not made, then on that circumstances this will be shown where? In the heading current liability and subheading other current liabilities. Now next is non-current liability. Next heading is non-current liabilities. This one, non-current liability, third heading is non-current liability. Under the non-current liability, long-term borrowings, deferred tax liability, other long-term liability and long-term provision. Non-current liabilities are those liabilities which are not the current liabilities. Very simple. Non-current liabilities are those liabilities which are not the current liabilities. So if you know the meaning of current liability, then we can easily find out which one is the non-current liability. So current liability is that liability which is payable by the company within the 12 months of the balance sheet. From the date of the balance sheet, if it is payable within the 12 months, then it's a current liability. And if it is paid not within the 12 months, then it's a non-current liability. Okay. Second, if it is within the operating cycle, then it's a current liability. And if it is not within the operating cycle, then it's a non-current liability. So the non-current liabilities are those liabilities which are paid by the company, which are payable by the company after the 12 months from the balance sheet date of balance sheet. So these examples of non-current liability, number one is your long-term borrowings. This one, number A, long-term borrowings, bonds, debentures, long-term loans, whether the loan is taken from bank or financial institution or from other source, and public deposits. These comes under the long-term borrowings. Okay. So long-term borrowings refer to loan taken by the company. Borrowings may be classified as a long-term borrowings when they are payable by the company after 12 months from the date of the balance sheet, reported balance sheet, from the date of reported balance sheet. Now come to after the long-term borrowings, come to the deferred tax liabilities net. What is deferred tax liabilities net? Deferred tax liability means when accounting income, your accounting income is more than your taxable income. When accounting income is more than the taxable income, then it is called deferred tax liabilities. Is it clear? When accounting income is more than the taxable income, then it is called deferred tax liability. So what is accounting income? What is taxable income? Taxable income is the income based on tax law. Taxable income is the income that is based on tax laws. And accounting income is the income which is determined as per the accounting practices followed in the enterprise. It is based on accounting practices followed in the enterprise. Okay. So taxable income is the income which is based on tax laws, and accounting income is the income which is determined on the basis of accounting practices followed by the enterprise. So when the accounting income is more than the taxable income, then it is called deferred tax liability, which is the second subheading under the heading non-current liability. Under this heading, first subheading is long-term borrowings and second subheading is deferred tax liabilities. Deferred tax liabilities. After the deferred tax liability, third one is other long-term liabilities. Other long-term liabilities. In the other long-term liabilities, premium payable on redemption of debenture. This will come. Premium payable on redemption of debenture. If debenture is a long-term debenture, it is shown under the subheading long-term borrowings. If the debenture is showing over here under this subheading long-term borrowings, then the premium payable on redemption of debenture will be shown in the other long-term liabilities. Is it clear? So if the debenture is going to reflect in the balance sheet under the long-term borrowings, then on that debenture, premium payable on redemption of debenture will be shown in these headings, in this subheading other long-term liabilities. Okay, if debenture is going to repay within the 12 months, then that debenture will be the current liability, become the current liability. Then that debenture will reflect in the current liability. So if the debentures is reflecting over here long term under the long term borrowings, and this will only reflect over here when the debentures will be payable after 12 months from the reported balance sheet. Okay, second one is premium payable on redemption of preference share. Premium payable on redemption of preference share. The same over here, if the preference shares is redeemed or redeemable after 12 months, then this will be reflected over here. Okay, then this will be reflected over here if preference share will be redeemable after 12 months. You know the preference share will be reflected where? In the share capital. Preference share reflect in the share capital. And premium payable on redemption of preference share will be shown under this subheading when the preference shares will be redeemed after 12 months from the date of balance sheet, reported balance sheet. If preference shares will redeem within the 12 months of the reported balance sheet, then this will not be shown over here in the non-current liability here, then that will be shown in the current liabilities. Okay. Next is under the non-current liability, fourth subheading is other. This one is long-term provision. Fourth one is subheading is long-term provision. What is long-term provision? All provision which are related. All provision which are related to claim, whose claim are expected to settle beyond 12 months after the reported balance sheet. Beyond 12 months means after 12 months. Provision, all provision for which the related claims are expected to settle beyond 12 months means after 12 months from the reported balance sheet, that are long-term provision. For example, provision for employee benefits like the provision for gratuity, provision for employee provident fund, provision for earned leave, provision for gratuity, okay, provision for warrants claim. So these are the examples: provision for gratuity, provision for earned leave, provision for warrant claim, provision for employee provident fund. So employee benefits schemes. So all provision for which the related claims are expected to settled beyond 12 months from the reported balance sheet date. That provisions are called long-term provisions. Long-term provision which comes under the heading non-current liability. So under the non-current liability, long-term borrowings, deferred tax liabilities, other long-term liabilities and long-term provisions. Okay.